I'm Jamie West, your local real estate broker, and the number one question I get is how's the housing market? So I've decided to put together monthly reports, and here's a market update for July to help you understand what's going on with the current trends. So for July, we have the updated quarterly pricing update, and we'll start with the actual year-over-year price change in regard to individual markets. What we can see if we go through this chart, each region we've had a very nice uptick in prices. So if we go all the way across the board, we'll see a very strong appreciation. We're not seeing the 7, 8, 9% that we saw on the West Coast, but we are seeing strong appreciation. Remember, the historic national average is 3.6%, and every one of these regions has been better than that as of last year. Now we break it down state by state, so you can see that there's no state in the red or any of them that are losing value. And then here in Florida, we're kind of right here in the middle at 6.16%. And on the Schiller case report, you can see that the appreciation is slowing back down to normal numbers. February, we did fall a little bit below that, but we're back up to historic norms, which again is the 3.6%. Here's the actual year-over-year percentage change by state. So you can take a look at these states' values and see exactly what states are having challenges and what states aren't over last year. What's probably more important is that CoreLogic forecasted what's going to happen in the next 12 months. As we can see, the entire country is very strong. As a matter of fact, they've upticked from what they had thought the national average was going to be. They increased it to 5.6%. If you look over the last couple of months, they had thought when they did this survey in May that we were going to be at 3.6%. Then they even increased it in June, which was nice, and now again they are increasing the projections. The new home price expectation survey just came out, and I wanted to give you some information. So remember, this is a nationwide panel of over 100 economists, real estate experts, investment, and market strategists. If we put all their numbers together, we can see that between now and 2023, nationally, the prices they think are going to be of about 16.8%. So we're going to see some nice appreciation over the next 5 years. The bulls top that at over 25%, and these are 100 people that were surveyed. So they think it's going to be much higher over the next 5 years. So we're going to see a nice about 5% appreciation annually for a total of 27.7%. Probably the most important graph, though, is the bears, the most negative, the people that, the glass is always empty, and they still think that we're going to be at 6.7%. So again, they're not even thinking that, we're going to be in the red or consider depreciation. So that's positive news. So when we take a look at the projections over the next 5 years, all the projections, they think it's going to level out at 4.1%. So then the pendulum is going to kind of swing down a little bit below normal, which again is 3.6%, and then kind of come back up and normalize in 22 and 23. So remember, we are in the longest stretch of an economic recovery ever, so there's going to be some slowdown, in the economy. But, they're going to be, just for those couple of years, a little bit slight and then back to normal. So that's what I'd like to share with you, the projected home price percentage appreciation going forward from these 6 different entities. This one home price expectation survey was actually that last slide that I broke down. So I've included that here: Mortgage Broker Association, Zelman, Freddie Mac, National Association of Realtors, and Fannie Mae. And none of them are predicting that we're going to see any kind of depreciation at this point. If we look at the values from 2005 to 2018, it's pretty interesting. The people that were able to stay in their houses would have seen really nice appreciation, and nobody would have experienced their home being less now than when they bought it at the height of the market, even back in the boom. Now, there are individual communities that may not be the case, but for the overall nation and the states, these are the numbers that we're seeing. We graphed out a report put out by Arch Mortgage Insurance, and what you can see is they think that North Dakota, because they're tied to energy, might have a moderate probability of home prices being lower in the next 2 years. The rest of the country, though, is either in a low probability of it happening or a minimal probability of it happening. And then you can see the graphs here and the color charts to see where you are in that state. Here is how optimistic Americans are regarding the future home appreciation. So on the bottom and middle segments of the income, they think that we're actually going to continue to see appreciation. But in the upper market, they think that, we might see a little bit of depreciation. And again, these are the consumers themselves that think that there might be a little bit of a pullback. Here's an opportunity. I believe that when we look at this, there's a new report put out by CoreLogic, and then of all the houses in the country, 11.3% were purchased by investors, and of that, 8.8% were starter homes, and 7.8% were the mid homes, and 6.3% were the high-end homes. So when you look at that report, you thought that it was institutional, professional investors, and they're getting more involved, but that's not necessarily the case. Share some quotes with you here. Investor buying activity in the U.S. is at record highs, and our records go back confidently about 20 years. So what's going on and why? Well, it turns out it's not the big institutional guys that are leading the increase in home buying. It's actually the smaller guys. It's those who have bought between 1 and 10 properties over this 20-year period. They're the ones that are really leading the increase in investor home buying. Another quote, or the graph here displays that. We take a closer look at that report, and you can see the mom and pop investors here are really skyrocketing to 61.6% professionals. And actually the institutional has dropped off, and they're the lowest percentage of the investors at 15.8%. From Mark Plummy, he says title agents and real estate professionals indicated home buyers are encouraged by the unexpectedly lower mortgage rates in 2018, a tailwind helping to boost demand and inspire homeowners to sell their homes. So you can see that right now, sellers are putting their house on the market for a slew of different reasons. Interest rates are lower, and then you can see that the seller traffic and the seller demand has increased. When we look at what happened with interest rates, they went up at the third and fourth quarter, and it really slowed things up. December, they started to come down, and now that's really helping spur the market. The first-time home buyer, the second home buyer, and the third buyer who currently own a home maybe are going to buy investment homes, second homes, and there's a lot of people selling right now. They thought they might wait, but they figured they don't want to lose the ability to get in, sell their home and get in at these low interest rates. So it's really spurring the market. Lower mortgage rates, higher wages, and more homes for sale have helped counteract rising home prices and ultimately made it so that buyers are able to afford more than they were last year. So this is all really positive news this month in this market report. And from Ralph F. Walton, with mortgage rates flat and inventory picking up, we expect more buyers to take advantage of easing housing market headwinds. And from Sam here, the chief economist at Freddie Mac, he says, the drop in mortgage rates over the last 2 months is already being felt in the housing market. In the near term, we expect that housing market to continue to improve from both a sales and price perspective. In the Z report, key metrics tracking existing home sales demand have been on the upward trajectory so far in 2019. This report ends positively for our forecast for existing home closings to increase 1% in 2018, despite a 3% decline through the first 5 months of the year. Our outlook implies 4% growth for the remaining months of the year, predicated on more supply than last year, a decline in mortgage rates, moderate home price appreciation, and improving affordability. And now I'll get into the July update with all the days on market, sales, inventory levels, and the mortgage rate projections. So these are based on everything that happened in June. We compiled it, and it's part of the July report. Update on home sales. So getting into that, they start with the average days on the market. So you can see the color coded here by the states. So Florida is at 46 to 60 days on the market, and the United States average here is 26 days. Existing home sales by region. So the U.S. Overall is negative 1.1, and here in Florida we're doing better than the Midwest and the West, you can see. Existing home sales in the thousands, so this is year over year. You can see 17, 18, and 19, we do the comparison and where the sales are so far. And then the new home sales, you can see that the new construction is kind of leveling out here from what it has been. Again, I've talked about in the past reports, a lot of the millennials are coming into the market, first-time home buyers. So you can see here 22% of the new home sales. The builders are really trying to accommodate these new buyers coming into the market. The $200,000 to $300,000 price range, and again, the 3 to 4. And the pending home sales. So here's the graph since 2014. So this would be the healthy historic level, and you can see that we did dip down the third quarter towards last year. So it really got slow, started worrying about kind of what was going to be happening with the market, and a lot of the news started coming out. Then interest rates went back down. You can see now we're getting back up to higher levels where we were in getting into last year. Here are the pending home sales year over year by region. So the overall U.S. is down just slightly, negative 7%, where we're actually up here in the South, doing better than the rest of the country in this region. Just a quick update on the bank-owned properties or the pre-foreclosures, which would be the short sales. You can see back in the day, we were up to that 35%. And then we kind of started to spike up again when we had that slowdown around December and January, and now we're going back down, turning back down. We're at 2%. Home prices. Existing home prices year over year by region. You can see the U.S. is at 4.8 on an average. You can see it broken down per region of the United States, and then the percentage of change in sales from last year broken down by price point. And then the case-Shrill report, so the year-over-year changes for April. Now these are a little bit behind; they don't have them currently to the month, so that's the most recent, is at 3.5, and the national average again is 3.6. Year-over-year so far we're at 3.6%, and they're expecting we're going to end the year at about 5.6% appreciation for the national average. Looking at the housing inventory, you can see we broke it down to the week. There's no week at all seller traffic. Like I said, more people are selling to try and get in that next home or get into the market. So there's more sellers kind of coming into the market to sell their home now to take advantage of that next house. Months of inventory here at 4.3. So there's, again, more sellers kind of coming into the market. So you're going to see inventory go up a little bit, but that's good because we were so low in inventory, it's hard. And you get into the housing supply year over year, you can see those numbers. And the new home inventory, this will be just broken down to the new construction. And buyer demand here, you can see broken down by the states. So Florida here, we are stable. And interest rates, again, you can see we've just recently had the lowest in the last 3 years. It came down quite nicely. And then here's the updated projections of what they think from Freddie Mac, Fannie Mae, MBA, and NAR. And then here's the average of what all of them are thinking all the way through the second quarter of 2020. This is kind of just a different way to look at it, the historical graph of where we've been. There's all the quarters kind of broken down on the bottom for you. And then for where we are right now and kind of what they think now going into the rest of the year into 2020. I didn't include this slide this month just to kind of show you that we have been on an uptick here as far as the mortgage credit availability index. So that's great. So more people can get loans and get into the houses. Don't forget, I do have the quarterly buyer and seller guides that come out. So I have it sellers, buyer's guide. I actually have a millennials version for buyers as well that you can get on my website, and it should help you with some tips on buying and what to expect in the process. And thank you for joining me for my July market update.